In our last video, we talked about what makes a stock worth holding for decades. Now we're taking the idea even further to never even selling it. I'm Joanna, co-founder of The Smart Investor, and with me is my fellow co-founder David Koh. So, what allows you to hold through market crashes? You've seen the Asian financial crisis, you've seen the dot-com bubble, you've gone through the global financial crisis, and most recently, COVID. And you've never felt tempted? No? Not at all? Not a tiny bit?
You mentioned those 4 seismic events that happened in the market.
Yes.
Has the market recovered?
Yes.
Absolutely. Every time it recovers. So regardless of what goes on in the market, eventually the shares that you buy will recover. So the reason why they recover is because of capitalism. When you invest, you have to believe in capitalism. And what happens with capitalism is that the people that run these businesses have one motive. They only have one guiding light, and that is to generate profits for their shareholders. So when you are looking at these companies, when you are investigating companies, you are looking at whether or not this company will be able to grow and survive over the long term.
Okay.
Now, I spend a lot of time looking at companies. I don't just simply say, oh, this broker here has suggested that we go and buy this particular stock, so therefore I'm going to go and put some money into it.
Then what do you do?
Well, you have to go and do the analysis yourself.
Okay.
So you spend hours, if not days, if not weeks, looking at the company. You try and put yourself in the position of, say, the chief financial officer or the CEO, and you say, what is this company planning to do over the next 5 or 10 years? And you have to say to yourself, what is this company going to look like, say, in 20 or 30 years' time? Now, if you put yourself in that position, say, 20 years ago, and you looked at a business, say, DBS or OCBC or UOB, the 3 big banks in Singapore, and you say, if I was the CEO of this bank, what do I want this bank to be in the next 10 or 20 decades? Now, if you have the same vision, or if the CEO has the same vision as you wouldn't have been in a bad place to go and buy DBS. And a company like DBS or any of the Singapore banks have done pretty well over that period. So regardless of what happens, whether it was the dot-com bubble or the great financial crisis or COVID, all of these companies managed to survive. Why is that? It is because they are driven by one thing: to make money.
But the thing is that, okay, we talk about the banks, the 3 banks is very, very clear.
Well, you say that now. You say that.
The benefit of hindsight.
Yeah, but you say that now. But the point is, at that time, when you were in the great financial crisis,
Yes.
you would have said, oh, is any of the Singapore banks going to go the same way as, say, Lehman Brothers? You could convince yourself that these banks are going to collapse like everybody else.
What if the business does deteriorate? Because 10, 20, 30 years is a very long time. Or what if, okay, you could have made a mistake or the environment could have changed? What then?
Well, of course, mistakes can happen,
Yes.
which is why you need to build a portfolio. Now, the question I ask you is, if you build a portfolio of 20 stocks, is it likely that you're going to make 20 mistakes in all the shares that you invest in? Highly unlikely.
If you do your homework properly.
If you do your homework properly, you are not going to make 20 mistakes. If you're going to make 20 mistakes, then really you shouldn't be investing in the first place, right? You should be doing something else, like, I don't know, maybe being a hawker somewhere, and sort of selling food. You shouldn't be investing. That is not to say that hawkers can't invest. I mean, hawkers can also invest, but you are not going to be making 20 mistakes. What you should do is to try and build a portfolio. And my rule about investing is that out of the 20 stocks that you invest in, 12 of them should be what I would consider to be income stocks. These are stocks that are capable of generating income over the long term, and it is kind of stable income, if not slightly increasing over time. 30% of your portfolio should be in growth stocks. And these are stocks that can be a little bit more volatile because they are growing over the long term.
Do the growth stocks generate an income?
Of course they do. Every share that I buy has to generate an income. And then you have the remainder of the portfolio, no more than about 5 or 10%. And these are what I would call speculative stocks, or maybe they are value stocks. They are stocks that don't fall into the other 2 categories. Now, if you build a portfolio like that, and let's say one of your income stocks, a stock that you research really, really hard into, and it for some reason or other falls by the wayside, then you would say, this company here is not what I bought originally. You don't have to sell it, because you have to think, what is this company going to do? Is it going to go bust tomorrow? Hopefully, all the shares that you buy, none of them are going to go bust tomorrow. So what you can do is to say, this stock is not an income stock anymore. It definitely isn't a growth stock because it's going nowhere. It's going through some kind of transition. And so you put it at the top of your pyramid. Remember, it was a 60-30-10. So you put it at the top of the pyramid and give it time to sort itself out. Generally, they will. How do they sort themselves out? Either they will be able to sort themselves out themselves, or somebody will come along and buy them out. And if they do buy them out, well, you don't have a problem anymore because somebody has actually sort of taken the decision for you. Or maybe they might consolidate, maybe they might merge with another business. So something will happen. So you don't have to worry about that. Remember, you still got 19 stocks apart from that are doing what your portfolio is supposed to be doing. So do I care that one stock maybe you made a mistake with? Maybe the environment wasn't particularly good for it. Right. So I don't care as much.
Okay, but then some investors might say that you miss better opportunities out there. Instead of moving it up, you could have sold it and do something else with the capital then. What do you think about that?
If you build a portfolio of 20 stocks and all of them are generating income, I can assure you, Joanna, that your portfolio will be churning out loads and loads of cash. And if your portfolio is strong enough, and if you are patient enough after time, the amount of cash that is coming out from that portfolio will give you a headache because you are going to be having so much cash to invest that you don't really care about this one stock that may have fallen by the wayside, that is just sitting at the top of your pyramid waiting for something to happen.
Okay, so not selling is not necessarily about being rigid or being stubborn in this situation. It's about having the conviction about the decisions that you've made and the homework that you've done.
Well, things happen. Things happen in the market. I mean, there is one stock that I bought. It was a real estate investment trust, a REIT, and it is going through a pretty rough time at the moment. So originally, I thought that this company would be able to generate income twice a year for me. Sadly, something has happened and the management is trying to sort itself out. So for now, this particular REIT is sitting at the top of my pyramid, waiting for something to happen. And what the management is doing is they're selling off some of their assets, trying to right the ship at the moment. And once it does manage to do that, then it will become an income stock again, and it can come out from the naughty step and go down into the...
Get into the good books again.
But it will come back down because basically it is a good company. It is just that things have happened in the marketplace that it could not possibly have foreseen. You mentioned things like COVID previously. Well, COVID has damaged this company appreciably. It has all these buildings that nobody wants to rent at the moment. Nobody wants office space. So this poor company is trying to find ways in which it can liquidate, sell off some of its assets. It's not bankrupt. And so therefore, once it manages to sell off some of these assets, it will become a good stock again. And it can, as I said, come off the naughty step and go back down into the income generating portion of the portfolio, and it will continue to do what I originally thought it would be able to do.
Okay, thank you, David. So will you have the conviction to hold the stock forever like David? Let us know in the comments below.